Good post-sunset on this end to a very mild and moist and sticky and uncomfortable afternoon again for the third consecutive day with highs in the mid-80s and high dew points. This is Vincenzo's Gold Crypto Investing, where you come. That's right, you like, subscribe, and share for a one-of-a-kind, company-made, probability-based trading alert and technical analysis and company philosophy of free market capitalism and personal freedom and sovereignty and the right to keep the fruits of their labor. Now, also subscribers, we have a very potentially stormy situation tomorrow in the greater Bloomington area. I will keep you up to date on any breaking severe weather, hail, wind damage, lightning, etc. People are interested in that, so I will show that. But look what I did for you, my subscribers. I went back and I dug in. And this is the kind of trading alerts and in-depth charting that is available at Vincenzo's, and it's exclusively at Vincenzo's Gold Crypto Investing. And this is part of what goes into my models on forecasting. I go back into the pattern and I'll plot out. In this case, I did three. Two scenarios where it's crashed and one scenario where it broke up. But I'll go through and put 5, 10 of each scenario in and then get an average and then try to figure out and see if what the current price action is doing fits into any one of these and which one takes over at one time. And it's a probability based. This is part of the computer model system, right? And you see it's followed it pretty good. Now, if we would have drawn this, if we would have had this right, and I was saying if I would have released something like this and I had this to go off, if I would have said the pattern's going to come down, like trade down, then it's going to trade up, and then it's going to trade up here. See that? Because it's going to be the median of my three tracks. Now, obviously, I would have had 15, 20 of each way breaking up, breaking down, right? But in this case, to make it clear, I only did 3. Now, you have the outliner way up here, the one that breaks bullish. The other two break bearish, right? And look how good they're fitting in. So this would be the mean of the track, because you would still have to factor this into the forecast, right? So the mean of the track would have been up here and then trending down, because even here it started coming down. See what I'm saying? This is all goes into what I do to try to figure out where the price is going. And look how beautiful that fits in to our falling wedge. And look how close the track has mimicked it, right? It's been on the higher end of the track, but then as it was falling right in the median, and now obviously that higher breaking out bullish. Let's get some of this out of here. Obviously, the bullish scenario is not playing out, right? It doesn't take a genius to figure that out, that it did not break bullish. Let's pour my company and soon-to-be YouTube famous line tool with an arrow, otherwise known as the perching tool, is what it's going to be called. And we're going to perch from up here. And you can see it's followed it beautifully. The mean of the track, both that one and that one, they both hugged the underneath support and started crashing, and it did. And then it found the bottom, and then they both started going up, and the price did. Then the both started trading over towards the resistance, and the price did. Then they both crashed. You see that? This one diverged up, the one that breaks bullish. Obviously, that didn't play out because the other two ones crashed down, and the price crashed with it, bottomed out, and then you see both of the two tracks come up to upper resistance. The price did, and now both failed to hold support and crash. So this is leading me. This is just something that goes into my forecast. So it wouldn't surprise me if you get rejected here with falling volume. That's why I'm saying the price is eventually going to come down. It could come up to the moving averages. I had a different track up there. I should put it back on because that would show you the outliner up here and why I'm hedging right in here somewhere. But it's followed these beautifully, and it crashes, and then you can have a buy down here at 20,000. That's how I get that target, right? This is just some of the method that goes into the madness and the in-depth charting and the time I take to figure out where the price is going. And this is one of the things that I use to predict, along with lots of other things, the Doge crash, the Bitcoin crash, the XRP crash, all the crashes that happen. This is the kind of stuff that I do all the time. And that's how I'm getting my $10,000 price target. Because out of, let's go back. See down here? Look at this one. It comes all the way down there. And then it comes all the way even lower. It wouldn't go that low, but obviously it's not going negative, but it goes to 10,000, right? And then it has a huge pump. It bottoms out at 10, double bottoms, triple bottoms at 10, right? You get a bottom, then you get up, down, which forms a W on the breakout, which is a bullish reversal sign and a bottoming pattern. Or if it flipped the other way in an M, that's a bearish reversal pattern. W's are usually bullish reversal, M's are bearish reversals, right? And then you'd have a massive chance for a 3 to 4x return on the pump in this scenario. And then you have to play it by ears because then it forms a head and shoulders. You see that? This is what I'm looking at. This is one of the, I'm gonna put 5 or 10 of these on for the bearish case, and then 3 to 5 for the bullish, and then show you how I draw and get in more in depth. But you see, that's why I'm thinking, I keep telling you that I think crypto's in for an extended bear market, and this is another thing that points me in that direction, along with monetary policy, inflation, fiscal policy, fear in the market, risk assets getting sold off like Bitcoin, right? Tesla, shit like that, all kinds of shit. But I think we're going into a bear market. And I think if I had to pick a mean of the track, it's going to trade, then you bounce, and then you come down, and then you come up, right? I think we're going to be doing something like this for an extended period of time. I'm just showing you some of the background noise that I use to put out a forecast. And I've been putting out the forecast since Bitcoin was up here. It was probably higher. It was probably in here because it was like 55, 56 and rising. And I kept telling you we were coming to 41,000, and then we were coming to 20,000. And then we would play it from there, but there was a possibility we come to 10. I kept saying that, and this is the same kind of stuff that I used to get to what I said back here, right? To forecast that so accurately. So why would I change my forecast when I was making it from here? And now we're way down here. Why would I change now and say we're going that way? I think I'm on the right track. Vincenzo's Gold Crypto Investing has been 3 steps ahead of this from the get-go, and there's no reason to vary from the forecast now and try to heist and shice and fleece you like the other ones on YouTube do. The 50, 100,000 subscribers are hustlers, paid hustlers. But I think the price is coming down. I think your top-end mark, if you pump tonight, there's no volume. The volume's still crashing as we zoom in. That's why I always zoom out. But just look how in-depth that is and simple and easy to understand. But that's why I think even if Bitcoin tries to pump the 200-day up here, look how there's no volume and it's getting worse. And you tried to pump on no volume, right? I think you could trade up to that 41,000 major 5, 6, 7 year resistance, and I think you would get rejected and come down. And the track says so. I have more than just these 3 in there. When I do my part of my probability computer model, company made, industry exclusive to Vincenzo's Gold Crypto Investing, I'm just giving you snippets, 1% of what I do to make a forecast. But I think our going forecast looks good, which would be good for all the coins, right? I think this is your critical spot. If you're trying to come up here and make a massive move for some big quick gains, you would have to have big candles in the 3 hour, back to back to back. I don't see it coming in. So if you get up here, you can get smacked, bam, shot down by the 200-day moving average and come right back down where the track says. I hope this was informative. Check me out on Twitter. You can get snapshots of this. And if you would like in-depth classes and stock charts on price forecast and probability-based tracks, get a hold of me on the link below. Comment on the video. Obviously, it's very easy to comment to you guys because of the YouTube Studio app. And we can work out in-depth charting for you guys like this, so you can be 2 steps ahead of the criminal gangsters and the fleecers and the heisters and the shysters, and stop being the one that buys in at the hype, that buys in because Elon Musk is going on Saturday Night Live and you just figured out crypto existed. Don't be that guy. Follow the shepherd. Don't be led by the don't be a sheep and be led to the slaughter. Vincenzo's Gold Crypto Investing is the best on the internet. Like, subscribe, and share. Peace and love to all my loyal, beautiful, glowing, gorgeous audience. This is Smooth Jazz 107.6 FM Detroit. I'm not a financial advisor, nor do I play one on my own radio show. This is strictly entertainment and educational purposes only. Peace and love. Peace and love.